All right, it is time for our Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing great, man. I just love the fact that we get to do this every week. It really does allow me to get out of my daily grind and go, what were the big things that happened this week? So thank you very much.
I love it. I love it. So this is for Friday, May the 6th, 2022. Let's get right into it. So Grant Cardone, what happened this week with Grant Cardone? What did he say this week?
It's really funny. I'm so glad we're doing this today because Grant Cardone put out a video today, Friday the 6th, basically him walking around Malibu talking about a recession is coming. And again, it's kind of the right message. Frankly, it's the message I hopefully have been delivering to my audience and to your audience that a recession is coming. It's time to prepare. And, oh, by the way, frankly, be excited about what is coming. Legacy wealth, good deals, assets on sale happen in a recession. When there is easy money and anybody can get lucky, you're not going to create legacy wealth, right? You're going to pay up. Recessions, especially the kind that we're about to go through, which will probably be a year to 18 months in duration, are times where you could get 1, 2, 3 deals that change your family's financial future. Now, to be clear, that might be an amazing stock sold at a discount. It might be an amazing crypto that had some margin call that you buy on the cheap. I don't care what it is. Do the work. Get ready, right? I believe in this recession, unemployment will double, which sounds scary. We're going to go from 3.5 to 7. For most of my adult life, we were taught that full employment was 6%. We're going to be a little worse than that. We're going to have 9, instead of thinking about 7% unemployment, I want you to think about 93% employed. Recessions are to be prepared for. If you've been following my channel and my weekly discussions with you, Ty, you're hopefully been getting ready. Got some dry powder, adding dry powder, not doing anything silly. Because if you have, you and I are going to do some great deals the next 18 months. And if you've gone to the next level and understand creative financing because you're following Ty, you have dry powder and the intelligence to do creative financing. You're going to have a home run beyond all home runs. I'm so excited for people that follow you. And I'm excited for the content you're creating for my course because you will help many, many more.
100%, man. I'm excited to be with you. And it's interesting. We've been doing this for more than a year, and you've been calling it quarter by quarter, month by month, telling people that there's going to be a housing slowdown. And, it's so refreshing to really be able to anticipate and make moves and make decisions based on having the right information.
Yeah, I want to be really clear. A lot of YouTube guys, they get a stick and they just repeat it. Folks, I'm not a YouTuber. I'm a real estate investor who's got 20 on experience, and my opinion changes all the time. I want to remind you that in late 2020, I think it was Omar, I said this first, and then you and I said it later. This will be the best time to do lipstick flips. I said that, and we made 6 figures plus in that market because it was easy. Then I said, okay, guys, time to stop. Market's changing. Oh, by the way, if you got a little cocky and started flipping $1 million properties, back the hell up. So my opinion changes. I'm not a one-trick pony. I make all my money from real estate. I just like giving back because, my goal is to create content and change lives, 50 years after I'm dead and gone. So that's why I keep coming back and doing this stuff. So my opinion changes. I'm not a one-trick pony. It just is. Recession's coming. Be careful.
Spot on. I love it. Let's talk about the stock market. What happened this week in the stock market? And again, you've been calling this. What happened this week? Let's talk about the stock market.
Yeah, the stock market, we're in a bear market, folks. A lot of you, again, you may not want to admit it, but the last 2 years, it was remarkably easy to make money. A lot of you got cocky. A lot of you now are getting burned. And again, I say this as somebody who got cocky 20 years ago, so I know how it feels. I lost 80%. 80%. I know how it feels. But unfortunately, you're now going through it. It sucks. And if you've been following my channel, you can go back and look at the data. I don't delete anything. So you can see that I've been calling it pretty right for a while. And the bear market's not over. We have a revaluation going on. The stock market is and has always been a market based on future earnings. Future earnings times some multiple, called a PE ratio. For the last 2 years, when risk was zero, that PE ratio expanded. We actually had companies not priced on earnings, but priced on revenue. That is dangerous. This company makes no money, but its revenue is growing. Let's pay through the nose. Well, now as the recession comes in, some of those companies are going to go to zero. Their burn rate is too high, and your stock is going to go to zero. Bear markets are not kind. There are stocks that are down 80% already, and they may never come back. It's just tough. Amazon lost 15% in a day last week. It sucks. Folks, what is happening is future earnings are being reduced. But most importantly, this PE ratio is collapsing. If all the companies reported the expected earnings and it didn't change, but the PE went from 26 to 16, your stock market's going to get hammered. That's just where we are. You can like it or not. You could buy the dip. Maybe you were one of the buy the dippers who got caught Thursday or Wednesday, whenever that was. Wall Street is running retail today. Retail is getting smashed. And if you follow our channel, hopefully you got out, but we'll see.
Yeah. It's interesting that, for a channel, we're so highly focused on real estate. But what I love about what you do, Michael, is you are looking at the whole economy. Yeah. You're looking at the entire world market, what's going on. Even with the stock market, you called that, hey, we're going to see recession. We're going to see a slowdown. Folks, be careful, get ready, prepare. So very, very spot on, Michael. Thank you for that.
You're welcome.
So let's talk about our third topic, which is tech layoffs. What's going on in tech layoffs?
Yeah. So I'm in the Valley, right? I've been through this. This is kind of a great recession.com blow up. And I turned on my Twitter feed, or I turned on Twitter the other day, and I saw no less than a dozen posts saying, hey, tech layoffs have started. Post here if you have a job opening. That's not normal, right? And oh, by the way, let me be very clear. I think tech layoffs have just started. They started with companies like Better.com and Rocket Mortgage and Wells Fargo and all of these things, because mortgage industry is done for some time. But it will go further. There are companies like Twitter, for example. I think I saw a post yesterday where somebody said Twitter's got like 4,000 engineers. And obviously we all know Elon Musk is on the cusp of buying it. My guess, Twitter doesn't have 4,000 engineers after Musk buys it, right? It will be something less. Companies in a recession, folks, and again, it doesn't give me pleasure to say this, but tech companies, they have what's called a burn rate. Basically, they take their cash in the bank, they have their overhead. How many months can we survive? And right now, in a recession that could last 2 years, companies are going to adjust their burn rate. They're going to whack heads. If you are losing money, your job is to lose less money. And unfortunately, that means pain is coming. And I told people, get close to revenue. Get close to revenue. This is not a time to take a flyer on a new product, especially you're a sales guy. Your whole division will get whacked. It's about core. Get close to core. Get close to revenue. Yeah, tech layoffs is just started, I'm afraid.
So this is just the beginning of tech layoffs.
Yeah, I suspect it gets a lot worse from here. Yeah.
Very interesting. Very interesting. So let's talk about listings. Listings are up, and we've been talking about this. You've been talking about the slowdown. Explain to people the slowdown. What is the slowdown? And talk about listings.
Yeah, the housing slowdown is something I brought up probably about 6 months ago that was going to be in our future. And that was before I knew rates were going up. I was clearly wrong at how fast they would go up. I thought we'd be at 5.25 closer to the end of the year, not May 1st. So the sudden ramp up even caught me off guard, right? I own what I got wrong, and I missed that. And it's just going to make the slowdown even faster. We were a car going 100 miles an hour. I had assumed that we will take our foot off the gas and we would coast, and that meant rates would go up slowly. What happened is rates went up 250 basis points in 100 days, which has only happened one other time. So instead of coasting, we have now run into a brick wall. we are going to see buyer destruction. If you're in the real estate business, you have likely had some buyers that were qualified, aren't qualified. If you're a home builder, you likely had buyers that were qualified that aren't qualified. That is demand destruction. What is going to be the surprise of all surprises is we have supply destruction as well. We have people that now have, Black Knight says 33% of mortgages have a 2 on it. 30-year money at 2.9%, you do not get rid of that mortgage ever. You are locked in. 50% of mortgages are 3.5% or below. Same deal. You're not selling. So what we're going to have in a housing slowdown, the first part of it is you're going to have listings come on with what I call wish prices. You happen to be in a market where, I'm just going to make stuff up, the house is really worth 400. You tell the owner it's worth 400. The owner goes, no, you don't understand. My house is worth 450. You try, but you finally take the listing and go, okay, we'll give it a shot at 450. Crickets. 30 days go by. Nobody even comes to the open house. Crickets. You now have a discussion after 30 days and remind them that you said 400. That owner is going to do one of 3 things. One, and very likely they're going to yell at you. It's how it works. 2, they're going to say, let it run and let it expire at 90 days or whatever your term is, and we'll just take it off. That's possible. Or 3, they were going to be so mentally checked out, like they've already sold, that they will finally listen to you. So I suspect we're going to have lots of listings. It's going to appear like these listings are coming out of everywhere, but more than half of them will be wish prices that will ultimately be taken off. So the housing slowdown is not going to be fun. It's not going to be fair. Lots of real estate agents are going to bust their ass and work harder for less money. If we go from 6.9 million transactions to 5.2 million transactions, that's going to hurt. If we go from 6.9 ultimately to something like 3.5 or 4, that's going to really hurt. The Fed broke housing. It is going to be broken pretty substantially for at least 2 years. This housing slowdown is going to be like a Corvette running into a brick wall. It is going to hurt. And we know the crash is going to be spectacular. We just don't know how bad.
Very interesting. Couldn't agree with you more, Michael. And I've got a comment on this is that one of the things in our audiences, Adrian and I, and just in any of the masterminds, foundation builders, we really have always preached and taught you focus on sellers who need to sell, number 1. Number 2, then you have sellers who want to sell. Those are usually people like, well, when we find a house in Texas or we're relocating. And then you also have that third seller, which is interested.
Yes.
And it's interesting that the people that are interested, you're wasting time. What Michael just described to you, they're not going to be a deal. They're going to do a $450,000 listing on a $400,000 house that Michael just described. We need to focus as real estate investors and real estate professionals on people that absolutely need to do something. So that's such a critical piece, Michael. Thank you for that.
Mm-hmm.
I want to just close out on CPI. If you can explain what is CPI, and I believe we're going to have CPI announcement next week. Tell us about that.
Yeah, so we really have 3 inflation indicators that are reported monthly that I pay attention to. There's CPI, which is Consumer Price Index. That is the one that I pay attention to because it affects families. It affects my family and your family equally. It stands for Consumer Price Index. Basically food, gas, rent, all of these things that just make up daily life. That is probably the most important monthly report for us as consumers. It comes out Wednesday. The last reading was 8.5%. I believe this next week it will come out around 8.2. So get ready for people to scream, inflation has peaked. Mathematically, that might be true, right? 8.2 is below 8.5. Unfortunately, the CPI has this thing called a rolling index or a base effect. And what we're really suffering from is we're rolling off a little number and putting on a bigger number. Inflation is not getting better. It is not getting better. So if you're buying food at the grocery store or putting gas in your tank, firsthand it's not getting better. but you will hear the talking heads scream inflation is getting better. Just to round out the other two, we will also get PPI, which stands for Producer Price Index. Think of this as wholesalers, right? Last month, wholesale PPI was 11.2, I think. That is a leading indicator to CPI. So again, inflation not getting better. And then finally, just to round it out, we actually got this number last week, PCE, personal consumption expenditure. That's the Fed's most important indicator, and that was 6 point something last week. So inflation is bad, inflation is bad, inflation is bad.
Very interesting times. Michael, thank you for all the work that you do. I want to encourage everybody, if you have not bought the books, you can go to Amazon. If you have the books, one rental at a time. He also has Conversations with Real Estate Millionaires, 2 great books. If you've already got the books, please give this man a 5-star review. I also just want to say for the class, so Michael has an incredible course. You can go to onerentalatatime.com to buy the course. I know that I've done 1 of 3 segments already. I'm doing a piece on pre-foreclosures.
Yes.
And I just want to share it. That's going to be bonus content that's absolutely free. Just my giving back to the community and giving to Michael and sharing. So I want to just encourage you, if you have any interest in pre-foreclosures, I've done the first part, which is 20 minutes on how to curate, how to pull lists, who you should really focus on. Number 1. Number 2 is I'm going to do a second part of that where it's now, how do you approach them? Are you door knocking? Are you doing mailers? Are you cold calling?
So
Are you
awesome.
texting? So we're going to go ahead and not only that, but what do you actually say to them? You know, what's the right thing to say? What are the wrong things to say? We want to make sure that we approach this right, that we treat people with respect and dignity, but also that we're effective and that we're talking about the problem and not dancing around it. So we're doing that, as well as I'm going to do a mini module, a 3rd module, which will also be part of it, which is I'm going to get into seller finance, talk a little bit about creative,
awesome.
a little bit about sub 2. So I want to encourage you, if you're a fan of this channel, if you like this content, buy the man's course. Buy the man's course. Go to onerentalatatime.com. Thank you, Michael, for all that you do. And share.
And let me just say, it is so amazing to be a part of a community giving back, but it's also, it is not lost on me that this community is growing because of experts like you, right? This bonus content you speak of, bonus content is being added for free. We are attracting experts that have experience I don't have. You want to know why Ty is creating a bonus content around pre-foreclosures? Because I have never done it, right? You want to talk about Airbnb? Great. Alyssa has done that. You want to talk about creative financing? Ryan Nickel, and hopefully Pace Morby shortly. So again, the bonus content is experts giving back to you around their area of expertise. It is, it's just, thank you. It is, I so look forward to this extra bonus content. People are going to love it.
I love it. Thank you, Michael, for all that you do. Have a great weekend.
You too. Take care.